These are the only trades you need to know about today, starting with number 10 in Sprint Nextel. The third largest U.S. wireless carrier's fourth quarter revenue came in higher than analyst estimates as the company improves its network and offers more smartphones in an effort to catch up with market leader Verizon Wireless. Dom?
Well, number 9 is Yelp. The consumer review website reported a fourth quarter loss that was wider than expected as marketing expenses ate into the company's bottom line. Yelp is increasing its advertising costs, looking to expand internationally and attract even more ad revenues. Jules?
At number 8, we've got a Blackberry, formerly known as Research in Motion. The company's seeing record demand for its newest device, the Z10, in the UK. In particular, sales there nearly 3 times higher in the first week than any of the previous versions of the device. And demand for Blackberry shares, it's up too. Jeffrey says buy. Wells Fargo's boosting the company to an outperform this morning, Betty.
And at number 7 is JP Morgan. The New York-based firm has its title as the most valuable U.S. bank with a market value of $184.9 billion, taking the crown from Wells Fargo as Jamie Dimon blunts the fallout from last year's London whale trading scandal.
And coming to number 6, we're watching Moly Corp. The rare earth producer has been upgraded to neutral at JP Morgan, citing a reduction in near-term risks due to the recent capital raise. JP Morgan also boosted its price target for the company by 20% to $6 a share. Julie?
At number 5, we've got Credit Suisse, Switzerland's second largest bank. It's raising its cost-cutting targets for the third time in 7 months. That's after posting fourth quarter earnings that fell short of analyst marks. The bank plans to reduce expenses by an additional $440 million by 2016.
And Green Mountain Coffee, the Vermont coffee company, is forecasting second quarter revenue lower than analysts were estimating as competition from Starbucks' recently introduced Verissimo eats into Keurig's market share at home coffee brewing. Dom?
Well, from coffee to newspapers, New York Times, the newspaper publisher, beat fourth quarter profit estimates on slower ad declines and growth in its online subscription business. The company still faces, though, a difficult advertising market as national marketing spending continues to subside industry-wide. Alex?
Number 2 is Yahoo. The web giant will begin using Google advertising services as CEO Marissa Mayer turns to her former employer to help boost the company's revenue. eMarketer predicts that Yahoo's display ad market share will slip to 8% this year. Betty?
And we're watching the number 1 stock today, which is, of course, Apple, the world's most valuable technology company, urged by David Einhorn to not eliminate the preferred stock option, saying that the company should return more cash to its shareholders. Basically, that the amount of cash it has would amount to $145 per share for each shareholder in Apple.